let's understand cascading effect of tax. Cascading effect means tax on tax. Let's take example of pre-GST regime where manufacturer is trying to sell some goods to the distributor. Now for selling these goods, taxable value of goods are rupees 100. Excise duty was charged at the rate of 12%, rupees 12. Total invoice value becomes rupees 112. We are not considering VAT or CST for the purpose of simplicity. Goods has reached to the distributor. Now distributor has to decide whether credit of these rupees 12 is available or not. In earlier regime, this rupees 12 was not allowed as input tax credit to the distributor. So this will be added to the cost of purchase for distributor. So we can say that this rupees 12 is not allowed as credit and will be added to the cost. Net cost has become rupees 112. So the cost of purchase for the manufacturer in this case is rupees 112. Now distributor is going to sell these goods to the consumer. Now for selling these goods to the consumer, we will consider the cost of purchase of rupees 112. He will obviously add some margin, some profit element, which is rupees 10 in our case. So the total of this becomes 122. Now we will consider VAT at the rate of 12% and total amount, the final price for the consumer, it becomes 136. So in the pre-GST regime, if we take 12% tax at every stage, the final cost for the consumer it is 136 rupees and 64 paise. Now let's see what happens post GST implementation. Now the same manufacturer is going to sell the same goods to the distributor. Our taxable value will be rupees 100 only. We will charge GST at the rate of 12%. The total invoice value in this case will become 112. Now after GST implementation, when the goods reaches to the distributor, these rupees 12, these will be allowed as input tax credit to the distributor. So the net cost for the distributor in this case will be rupees 100 only, because this 12 rupees is allowed as ITC and can be reduced from the cost. So the net cost is rupees 100. Now the cost of purchase for distributor in this case was rupees 100. Distributor is now going to sell these goods to consumers. Now the cost of purchase was rupees 100 because rupees 12 was allowed as input tax credit. Now some profit margin, say rupees 10, was added by the distributor. So it totals rupees 110. 12% GST is added and the final price which is going to be for the consumer is 123. So after GST implementation, the net cost of purchase for the consumer is 123. Now let's see both the regime. In earlier regime, the total cost to the consumer was 136, but now in GST it is 123. So this is how GST is beneficial for the consumers. Avoiding cascading effect, the things are becoming cheaper for the consumers to buy.